Welcome back to BT on this Wednesday morning. And yeah, talking money and talking interest rates as big news has just come down.
Right. 45 minutes ago, the Bank of Canada put out its quarterly monetary policy report and shocked many by cutting the interest rates by 0.25%. We get an expert on the line in the form of Helmut Pastrick, who is the chief economist for Central One Credit Union. Thank you for joining us this morning, sir.
Good morning.
Let's chime right in on the key interest rate cuts. What does that actually mean for Canadians?
Well, it'll result in a reduction in the prime lending rate. Any variable rate mortgages geared off prime will be lower. Lines of credit will be lower as well. So this move was intended to provide some stimulus to the Canadian economy.
You know, this is the first move for the key rate in over 4.5 years in either direction. When you look at the economic outlook for Canada in 2015, what do you think this statement, what is the statement that's made this morning?
Yeah, so the Bank of Canada has downgraded its view of the 2015 economy, particularly in the first half of the year. A fairly substantial reduction in economic growth is expected by the Bank of Canada, and then some firming later this year and into 2016. So the rate cut is in reaction to this downgraded outlook because of the plunge in oil prices.
Speaking of oil prices, how does it affect the loonie? What are we seeing on the market so far, 46 minutes into this?
Yes, the Canadian dollar's down. It's down to about 81 cents, 81.25. The equity market is up. The TSX is up about 200 points, so that's viewed positively. Obviously, exporters will be helped by the lower Canadian dollar, and should, over time provide some lift to the Canadian economy.
So, Helmut, what would you say the expectation is for someone waking up this morning, looking at their financial statements, whether they be RSPs or, as you mentioned, the equity markets? What should we anticipate for fluctuations given this key cut?
Well, this move potentially provides some support to the equity markets. Of course, the TSX has had a rather bumpy ride in the past few weeks, mainly because of the drop in oil prices and other resources prices. So this may provide a bit of a lift, but it does appear that I think we'll see some further volatility. I wouldn't expect the TSX to take off in any major way in the next little while. We really need to see some earnings improvement on the part of Canadian companies. So I think later on in 2015 and in 2016, I think the equity market would be in much better shape.
Now, this move comes as a surprise because there was an expectation that it might happen later in the year or early next year?
Well, actually, the expectation was on the vast majority of market forecasters and observers that no change would occur at this meeting or basically for the next several months. Most forecasters had the next move to be a rate increase. Some had it later this year, and others had it into earlier 2016. But a rate cut was not expected by even the market or economic forecasters.
Great insight, Helmut. We appreciate the time.
You're welcome.
Helmut Pastrick, chief economist from Central One Credit Union, chiming in on this one. And you know the impact, especially for those carrying mortgages and big ones in our neck of the woods. That's going to make a bit of a difference.
There are a lot of people waking up to the news that the Bank of Canada has cut its interest rate by 0.25%, surprisingly, this morning.